Hi, my name is Eric, founder and CEO of Burkholder Wealth Management. I'm here today with Val, our associate advisor. And first off, we hope everyone's getting excited for Thanksgiving week coming up. We've got our fire in the background to try to set the Thanksgiving mood. So what we're going to talk to you today on this video about is how portfolios are designed for situations like we're seemingly going into right now, which is the markets, some volatility is picking up. We've seen both good and bad news coming out about the economy and a lot of uncertainty, which is pretty normal, but it seems to be a little bit higher than typical right now. So we want to talk about how can you design your portfolio? Should you make any changes during times like this? And what's kind of the best decisions to make to protect your assets and invest for the future? I'll have Val start off. So tell me, for the people out there who are not yet retired, they're saving, they're contributing to their accounts, they're probably 100% invested in the market or very close to it. What should they do, if anything, and kind of how should their portfolio be designed for times like now?
Yes, so I think starting off is a good point. If you're still contributing and you're still active and you're not close to retirement, I think being 100% equity does make sense usually, because you're usually not using your assets, you do not need them. And it's a good way to just protect your assets from inflation and capturing as much growth as you can before retirement comes. And then once there, we can look into adding some bonds and some cash in there. Recently, the question we've been asked a lot is, how is my equity assets will perform during a downturn or a volatile market? And the question is, you can be highly diversified even within equities, and being highly diversified within equity will enable you to play around a volatile market and leverage your tools to make sure that you're getting as much return as you can. First, with your contribution. So if you're still active, by contributing on a monthly basis will enable you to buy assets and stocks at a good price. Moreover, having different sectors and not just US large growth right now enables you to have some sectors that are up, hopefully during that volatile time. And doing so, you could trim them down and you could buy other sectors that are down for this quarter, for the year. So I think a volatile market, instead of risk for people that are still contributing, it's more a good opportunity to double down and making sure that if you have any cash, it's a good time to invest it and just not to be scared. You have a long-term 5, 10, 20 years horizon. I think the best way to look at the market is on a long-term perspective, not on a short-term. It's really hard to predict the market. But could you tell us more about what if you're close to retirement or already retired?
Yeah, and just a couple more things I thought of as you were talking there. But we like to share around the office with it. We can't take credit for it, but it's investing is about time in the market, not timing the market. And so as Val said, if you're not yet retired for sure, you've got a very long time horizon, and the best way to try to capture that market rate of return is to be invested in the market, because it's just, we don't really know when those pullbacks will happen, even though like the market is some parts of the market's very highly valued right now, but it's too hard to predict when we're going to hit that pullback. And so using that cash to invest, and then we have a lot of data too on even when we hit market highs, the likelihood that you're at another market high a year, 3, 5, and 10 years out, I mean, they're all over 75%. And obviously, the further out you go, the higher that probability. So put the odds in your favor, use it as an opportunity, like Val said, invest cash and invest across a lot of different asset classes. Then you don't have to worry much about hey, I'm 100% in the NASDAQ. That could be obviously a bad situation to be in if we have a significant, the AI bubble pops. To answer your question, Val, so what if young people need to stay invested? I'm older, I'm closer to retirement, or I am retired. I don't have as much time to recover. Like, what should I do during times like this? And I think the answer is similar. The biggest difference is typically you're not going to be 100% invested in the market. And it's all, we would say, is very dependent on the client's cash flow needs and where they're at. I think a lot of places kind of have like the standard portfolio for anybody who's retired. So it doesn't matter your cash flow needs, whether it's a small percentage of your portfolio or a large percentage, like everyone's going to get that 60-40 portfolio. We think customizing that strategy to the individual retiree is going to, for one, make a better experience, and two, hopefully increase returns. But you're going to have some portion of your portfolio in fixed income and cash, specifically because when we have times Like, and I say like now, I mean, the market's still up double digits for the year. People are just kind of starting to get a little worried, but if we do end up in a period where the market's down, most of the time, fixed income and cash is positive in the years when the market's down. So that gives you a lever to pull from to generate cash for your monthly cash flow needs and wait for the market return. And even on top of that, we're still going to be rebalancing. So we're going to be selling some of those bonds that are at a gain and actually reinvesting into equities, the whole buy low, sell high disciplined strategy. You still want to stay invested. Even retirees, right? I mean, life expectancy is increasing and it's still a long time. So you do have a much longer time horizon than you think. And so it's similar from that perspective of staying invested, but making sure your risk profile fits where you are at in life. I think another thing to think about for everybody, and we're not proponents of timing the market, but if you have found yourself sitting on excess cash, this is a good time to start thinking about putting some of that to work. I mean, I look at it any day that the market's down, the market's on discount that day. Doesn't mean it can't keep going down further, but you're at least buying it, at 2% less than it was priced the day before. So I think a lot of times everything else in life, they want a deal. But in the stock market, for some reason, they just want to buy the thing that's the most expensive. And you need to shift that mindset to think like you do in everything else. Like you want to look for deals, and deals are things that are down in price. So if you look at it from that perspective, I think you could be open and potentially take advantage of, if we do have a pullback, which we don't know, but we might. So
yeah, that's a really good point. I think your main enemy in investing is your behavior and your short-term reaction to the market. I think having a good plan and a stable plan with either your financial advisor or even yourself enables you to take this piece off and just you have a plan, you stick to your plan. Any new cash will be invested based on your model and your tolerance profile. And then it's enabling you to just getting into that market, being invested and using those downturns to keep investing and keep believing in the market. The behavior could also, we looked at different scenarios. Selling when it's down and buying when it's high could impact your plan significantly in the long run for sure.
Yeah, absolutely. That's a really good point. So having a strategy that you can stick with and make good decisions, because it's very hard from a behavior standpoint, like you said. Well, hopefully this is helpful to everyone out there. As always, if you have additional questions, specific questions about your circumstance, we're here. We're happy to help. Post a comment. We can answer there as well. So hope everyone out there has a great Thanksgiving, and we'll see you on the next video.
Yeah, happy Thanksgiving to everyone, and feel free to call us at 918-727-7100.